Hi folks, it's Dr. Jeff Camarda with a somber word on what the coronavirus stock crash impact may be on your retirement and overall financial planning. So what does the global COVID-19 pandemic mean for stock investments? As fear of the coronavirus sweeps the globe, a fierce financial panic has set in. Stocks have not dropped this far, this fast, since the Great Recession panic of 2008. Now, like then, markets have fallen in lockstep, meaning that losses are similar regardless of which country stocks we're looking at. They've all pretty much plunged together. Drops are pretty even across the boards, and they are steep, scarily steep. From the S&P 500 to the Dow Jones Industrial Average to NASDAQ to world stock indexes, wealth is being erased dramatically, I believe temporarily, but dramatically as stocks plunge. Sellers way outnumber buyers. It's a scary time, and not just financially. We're a long way from figuring this disease out. It's spreading with increasing traction around the world, with cases cropping up in very unexpected places. So take good care of yourself. Avoid travel. Distance yourself from others in meetings and casual encounters, and consider N95 masks. They're still around. They're being hoarded and jacked up in prices, but they're around, and you should try to get a few if you haven't already. Now, the death or mortality rate so far for the disease looks pretty low. That's good news, but most of the data are out of China, and I, for one, don't really trust those data. But hopefully, the mortality will remain low. One of the reasons that it seems to be spreading so easily, and maybe is more widespread, is a lot of folks may not even notice that they have it. It appears if they may be asymptomatic, have no symptoms, or it just appears if they have a cold or the flu, and they don't realize it's coronavirus. So anyway, hope for the best. And the best is that this new flu fades by summer, but plan for the worst. And the worst may mean stocking up on masks and food, developing work at home or school at home contingency plans, and just avoiding avoidable human contact. If you must meet, keep your distance. If you come see me at the office, please forgive me in advance if I don't hug you for a while. Then I'm sure that you don't want me to hug you until this thing passes. Now, beyond the paramount health considerations, let's try to get a bead on the potential risk that the virus poses to your wealth. First, take a deep breath. It's hard to get context with the media talking heads yammering on about the gloom and doom. So take a breath and try to get some perspective and balance. The first thing to remember is that bad news and panics like this are commonplace throughout history, for the past 10, 20 years. While tragic, none have yet derailed growing human prosperity or even put much of a dent in the long-term upward trend of the stock market. So included with this video will be a link to the Forbes article that I wrote that is going a bit viral, if you'll forgive the pun, even now. Some of you have seen it, but take a look, because there's a chart there that I can't easily depict on this video now that we kind of threw together. Please forgive the poor quality, but I want to get you the information fast rather than having more professional production standards. So have a look at the graph in that link. What it does is it charts world stocks with pandemic type events overlaid as black dots on the graph, which goes back, I think, to 1970. As you can see by looking there, none of these pandemics had any clear impact. In fact, only 2 of the 14 on the graph are correlated with a sharp downturn in the markets. And stocks actually did really well after 9 of them. After most of them didn't have any impact, stocks kept on going up. So what does this all mean? What does it tell us? It tells us nothing really, except there's no clear relationship between these pandemics and stock market performance, and that stocks performance generally is driven by factors other than world health considerations. The recent downdraft has been fierce. We've gone from records to correction, and then maybe even a bear market. The market was down as much as 15% and change when Professor Siegel was speaking this morning. In less than a week, it's almost bear territory, 20%. I think we're down about 11 maybe since the peak as I record this late Friday afternoon. We may even hit and be stuck in bear territory before it's all over. And while the recent crash is clearly associated with the virus, I don't believe there's any real relationship to it. Why would I say that? Well, the market has been overdue for a correction for months and months now. Since the bottom in December, on December 26th of 2018, it seems to have gone pretty much straight up. Greed was in control of the collective market psyche. Events like Iran's attack on Saudi Arabia, the near miss of what could have been a catastrophic U.S.-Iranian war just a few months ago, even the early warnings of the coronavirus could not dent the greed-driven march of stocks upward. This correction was long overdue, and the coronavirus is just the excuse or explanation that is easy to paste on it. If not for the virus, something else would be blamed. But it was time. Now, certainly there'll be economic impact. People will spend less on travel, like myself. I canceled 2 trips, one to a family wedding in New York this month for fear of the virus. People will spend less on travel. Supply chains are choked. I wanted to buy a part for my boat, and they're not sure when it's going to be here from China now. People will become more cautious and careful spending money. All of these things will reduce companies' profits and have some impact on stock prices. Travel-related companies like airlines and cruise lines will probably bear much of the brunt. Some winners like Gilead Sciences, which we have a position in Caesar coincidentally, and other farmers will likely shine as new treatments are developed. But will the world come to an end? Will commerce cease? Not on your life. So I view the current crisis as a profound buying opportunity. Of course, you know that's the kind of person I am. I'm not cutting back at all on my stocks exposure because of it, and I'm shoveling what cash I can scrape up into the market at what I consider to be bargain prices. Now, I know it may be hard for you to share my perspective. The human brain is just not wired to appreciate really long-term data streams without extraordinary effort. We just tend to look at recent history and make decisions based on that. We evolved that way. It was very good for survival through most of human history, but not so good for investment decisions. So take another look at that graph in the link that we sent along with this video. Look at the peak right after the NASDAQ fever dot. That marked the peak right before the Great Recession, right before the worst bear market since the Great Depression. And we're not likely to see that bad a market again ever in our lifetimes. It's kind of a once-in-a-century black swan event. But if you had dumped all of your money into stocks at that point in 2007, October of 2007, I think, the worst possible time, the very peak before the Great Bear Plunge, and you had the discipline to just stay invested, you would still be at near double your money now, only a decade or so later. And that was the worst possible timing you can imagine. So try to keep that in mind. Stifle that annoying better sell before it goes to zero voice in your head and just stay the course. In the end, I am absolutely convinced that you'll be glad you did. That's what I'm doing with my family's money, and that's what I think you should consider doing with yours. And again, thank you so much for watching. I'm sorry that this was a little bit sloppy, this video. Maybe a little bit long, but this is really, really important. I'm sure you're concerned, and I wanted to put it together for you as quickly as I could for you. By the way, Gilead Sciences is used in this opinion piece as an example of a pharmaceutical company and not intended to be a buy-sell recommendation. The author, yours truly, and our firm hold positions in Gilead Sciences as of the date of this video. Thank you so much for watching. Until next time, this is Dr. Jeff Camarda.